Okay, now let's take an example that's a little more complex and that's closer to the reality of the market. So what you actually have to do in the real marketplace from a top-down multi-time frame approach, taking that whole thing into context and putting those reference areas and what's likely to happen in that sort of context. Okay, so here we're looking at a nice uptrending move. Okay, the market's been uptrending for quite a few days, nice strong uptrend. We'll do a balance here, right? And then we gap right through it, confirming that the uptrend is still going, and we gap right up, all right? The next day, though, here, we gap straight down, kind of leaving this what's called like a little island. We gapped up, we hit it, and then we gap down, right? Now, when this type of thing happens, you can mentally zoom out and picture what this means, right? This whole day, a gap up, we went this, and then we gap straight back down and rejected. This whole day itself is like a selling tail on a bigger context. If we were to zoom out, we would see this as just a selling tail because on the bigger context, we barely spent time here. We just went up one day and rejected right down, all right? So now in the context of this whole uptrend, we'd be thinking two things. We'd be thinking that, okay, the uptrend so far is still intact, and this previous key reference area should hold as a nice support level and should cause a bounce higher. That's on the one hand. On the other hand, because of this island that was left here, because we gapped up and then quickly rejected it back down with a big high conviction gap down, we might be thinking, okay, on the bigger time frame, on the bigger context, we might be starting a bigger pullback or correction of this uptrend. That's not just going to be a small one, but that's going to break through this area and be a bigger correction. Now that won't invalidate the whole uptrend, but if you think of this as one time frame, right? Let's say this is the larger uptrend time frame. The intermediate time frame might be starting down. And if that's the case, because of this aggressive selling now, if that's the case, we might want to weight the intermediate time frame a little higher than usual. We're still going to give the benefit of the doubt to the bigger time frame. So we're still going to expect a bounce here. But we're not going to be as aggressive in expecting that bounce because of this bearish action here that could be foretelling of a bigger pullback. And we're going to be paying very close attention to see if this area does fail, if prices do break through it, because that's going to tell us that we're correct in thinking that an intermediate time frame down move within this bigger up move is going to take place. And so let's see what ended up happening so far. So what ended up happening is we indeed did get the bounce off this previous high volume node, right? And we shot up, and at that point it was looking like, oh, maybe the uptrend is just going to continue. But then the sellers that had started here came back and gapped it down very aggressively once again, right through this whole balance area. Okay? And now at this point, here's our thought process. Our thought process is, even though the bigger context is an uptrend, right? We always have to be focusing on several time frames. And the time frame, if we were trading this day, the time frame that's next higher than our own is this intermediate downtrend that's moving. If you notice what I'm doing here, and this is something that we discussed in one of the drills from the previous session, is that I'm looking at time frames within the same chart. I'm not zooming out to a different chart to look at time frames because you can visualize them within the same chart. If I wanted to zoom into this time frame, maybe right now this is a 10-minute chart, maybe I would go to a 5-minute chart and zoom in just to this, so my whole screen would just be showing this. But I can visualize that straight on this chart. I know this is the bigger uptrend, right? And in my mind, this subsect of it, right, is a downtrend on this time frame in the context of the bigger uptrend. And so given that, given what happened in this new intermediate term downtrend, right, we broke through this very important support area, now we'd be expecting prices to be lower. And now as we reach this support area, this area where there is a small balance, and let's draw it right in here, right, there was a small balance here, and then there was this strong directional push higher, the high conviction move higher on high volume, right? This would be our next support area in the context. But here's what we're thinking at this point. We're thinking, okay, a new intermediate term downtrend seems to have just started. Now, this downtrend so far has not invalidated the whole bigger uptrend, right? But is pointing to a potentially bigger down move within the uptrend. And so, given that, this support that happened 5 or 6 days ago is not a major support area. It was only 1 day of balancing, right? And then an up move. It wasn't like this. It wasn't 2, 3 days to be a major support area. So now, despite this being an uptrend, we're thinking, okay, we're not going to weight this very high because our immediate context are aggressive sellers in the intermediate term time frame pushing the market lower. So while we may get a bounce at this area, the strengths of these guys that are selling is probably going to overwhelm this area. So we would not give it as much weight. Now, if this action hadn't taken place, right? If these very aggressive sellers hadn't gapped the market down huge here and had it gapped it down huge here, taken through a major support area, right? If it was just a normal uptrend and then we pulled back into something like this, we would weight this higher, right? Because that would be just, okay, the market moved higher, let's say here, right? The market had moved higher here and we pulled straight back here. We would weight this high because nothing is saying that there's aggressive sellers. If it was a normal pullback to here, this would be weighted highly, right? If it happened right away, and we would expect a bounce here for sure. It wouldn't happen for sure, but we would for surely be expecting that as the high odds move. Now though, since it had been several days and all this had transpired, this is not a very important key reference area, so we give it less weight. You see how this is discretionary? It's based on judgment, and it is going to take experience. Don't feel bad if you don't get it right away. This comes with time, but I'm giving you the principles of how to look at it. And so again, maybe we expect a bit of a bounce here, but not too much. And let's see what happened. The price came, initial test, there was a small bounce, maybe 6 or 7 points, which was decent if you were trading this day. This was a tradable bounce, right? But looking at the bigger picture, it kept kind of pummeling through it. And let's see what happened after. So price bounced for a couple days, had a nice bigger bounce. So this area was holding pretty decently well. And then we saw that we tanked through it. So it held pretty decent for 2 or 3 days. It was holding. But the whole point of the analysis of this big push down and this big push down is that the area, which was now here, is not going to be something that's just strong enough to reverse this intermediate trend upwards, right? It was probably going to cause a bounce, but we couldn't weight it strong enough. And so the market kept going down. Let's see what happened now further. It ended up gapping down again, even lower, right? So this was the previous smaller reference area. It now had gone down through it by about 25 points, which is quite a bit. This whole thing was confirming itself now to be an intermediate term downtrend within the context of the bigger uptrend. And then after that, this proved to be the low here, and we pushed up and we made a major move up and we started balancing. But now let's take a look at, zoom out and see why this low happened and what's happening here. Okay, so now we've zoomed out a bit. This was the eventual low at 1260, right? This was the first big balance area that got broken down through with two gaps. This was a small one that kind of made the market hold here sideways for a while, but then we broke right through it. And then we gapped down, and this was the real low, where then we went up and started balancing again. But why did this low happen? Well, this low happened because the bigger term trend asserted itself, as you'll see here. Let's move this a little faster this way. Okay. What you see here is that what started this major uptrend to begin with was a breakout of a several week balance. Alright, there was a major balance area here. Okay, and this was the high volume node, and then we pushed out straight from the high volume node into this massive uptrend. So now, when we had started this intermediate downtrend in the context of this uptrend, right? Again, this smaller balance area stopped being as important. We expected that it'll break through it, right? But now, where did we stop? Look at this. We stopped. The low came right at the edge of this previous balance area, right at where now resistance had become support. Okay? Here, we would have been weighting this balance area very highly. Why? Well, because it's huge. It's a massive couple week balance area, right? And it was the cause of what started this big uptrend. So now, despite the fact that we were trending down here heavily, right? And maybe when we were looking at this, let's zoom in, this seemed very scary. We had been going down day after day, and now we have gapped down and moving strongly downwards. And this whole intermediate trend had been down and breaking through this previous balance area, breaking through the one before that, the smaller one. So this seems all bearish. But the context was that the bigger uptrend that had started from this balance area was not broken, right? So now this is where we would expect that this intermediate term downtrend was going to end. And our expectation is now we have a massive key reference area. The bigger term uptrend is still not broken in and of itself. This is likely a very good buying point, a very good point for the market to reverse and for the bigger trend to reassert itself, which is exactly what happened here. The bigger trend started reasserting itself. Now watch on the upside what was happening when the bigger trend was reasserting itself. So okay, I've zoomed in a bit here now, right? What you'll notice was this was the intermediate term down move, all right? Now this was a balance area right here, for instance. So it's a nice balance area. And we had gapped down and pushed right through it, right? Now, in this context, so if you were looking at this in isolation, this is a down move. This is a balance area. We have pushed lower. This should serve as good resistance when you go up, right? Well, under normal circumstances, yes. But when we're looking at the bigger time frame view of putting all these things into context to know how to weight them, what would we be thinking? Well, here we are. We'd be thinking, yes, on the one hand, this is a down move, and this should prove as a resistance point when we test it from below in its own context. But now we're looking at the bigger view, and the bigger view is that we had just hit major support. And when you just hit major support, the expectation is that we're not just going to get a little bounce, but we're going to get a big bounce consummate with this massive bounce area. And so we don't expect a small bounce, we expect a big bounce. Now we're looking at a bigger time frame, right? And all I've been doing is just zooming the chart in and out to show you the bigger time frames. And so in that bigger context, we would not expect this bounce area to hold. If we were only looking at this in isolation, we might be fooled into thinking this is a great selling point. But from this bigger context, we should always be zooming out to, we realize that now the likelihood is that the bigger trend is going to reassert itself. The bias for us should now be to the upside, to the long side. These key reference areas from before, this one, and this one, this whole thing here, and this high here, these previous highs, and even this one before, this directional conviction move, and even this one here, all these now are likely to be broken to the upside because we have the bigger time frame now back in sync with us. And now this we are expecting to be an up move in sync with the larger term trend, effectively meaning that this intermediate downtrend had now likely ended. This is how we would be thinking about things. And so while we might be expecting small reactions now at the resistance areas, we would not be weighting them that high, right? So here was the gap, the place where the gap down started, right? A bit of convictional downside. When we hit it, we reacted slightly to the downside, but we pushed right back up, right? Here was a major high volume node. We just went right through it. Here it also coincided with this major high volume node. Again, it only caused this small reaction. So this was the compounding of both these reference areas, right? But then we just shot right through it. We shot right through this whole high volume node here, and we kind of balanced. And then moving out more, we jumped up, hit this previous high conviction down move where we had gapped down strongly, right? We stopped here. We kind of bounced sideways. It did give the market a nice reaction to the downside, right? So this was good resistance. But how are we thinking about this resistance? We're thinking about it as providing us with short-term reactions to the downside, not reversing the whole move. So if we were day trading it, sure, look at this, right? If we were day trading this, let's get rid of this volume profile off of it. Yes, this could have been a nice short. It was a 5-point move in the S&P 500, right? Intraday. And you do look at those things. Even this could have been a tradable move. This was also 5 points if you had shorted this. And those things that we're going to look at when we talk about strategy and tactics. But the point is, you would not be weighting them very highly on the bigger time frame and expecting the market to have a major move down from them like we were before. You would be expecting them to give small reactions, but to eventually push through them because now the context had changed to an uptrend. And this is how you look at these things. I know it might seem and sound a bit complex, which it is, This is how the markets work. They're not that straightforward. And you should be happy that they're not. If they were, then anyone could learn them very quickly without hard work, and then there would be no real edge. It would be too easy to make money, which means that the whole opportunity would be spread across many people and you could barely make any money in the markets. Right? So it's a good thing, their complexity. You should be thankful for it, and you should just dedicate yourself to hard work and hard study to be able to do it. Because if you do, you can definitely learn this stuff. I'm no different than you. You might look at me as an expert right now teaching you all this, but I learned it through experience, through observation, and through learning from others. So it all helps. And the way you'll get good at this is by looking at many, many charts and zooming out to the larger time frames, like this. Okay, this was a major low. Why was it a major low? Oh, because it was hitting a major balance, right? Here we had rejected hard to the downside once again. We broke through this. Okay, so now which probably meant that we were likely to be in an intermediate term downtrend, but we still had not broken this larger uptrend. So for the time being, we're going to weight the short side higher. We're not going to pay attention to the very small reference areas on the upside because we're expecting this move to go lower. But we will pay much attention to the bigger key reference area that started the up move. And once we hit it and reverse, now we'll start paying attention to support that is being created in this one and expecting bounces from there to lead us to new highs. At the same time, while we're moving up here, even though these previous key reference areas are not reversing the move, they are providing nice tradable reactions if you are day trading this market. So I hope now this has shown you how to look at everything in context, how to zoom out and in one chart see multiple time frames. In this chart, what do we see? We see the major uptrend, an intermediate term downtrend, right? And now we're resuming the major uptrend again. And if we had zoomed in even further, we would see that on each specific day, right, different things might have been happening, right? On this day, we were shooting higher. It was all looking bullish, but we couldn't forget the bearishness of the immediate time frame. And this is how you look at everything in context and how you take any specific key reference area and know how much weight to give it and know how to anticipate what's likely to happen there. It's all based on what is the bigger trend or lack of trend that's happening on the bigger time frames.